Welcome back to another episode of Harmonious at Lunch, the show that fuels your business success. I'm Brandon Gano, your host and guide through the world of harmonious business growth. Today, we're unlocking powerful strategies with industry experts to help your business thrive. If you're a business owner, entrepreneur, or executive, you are in the right place. Join me and our incredible guest today on the journey to clarity, growth, and success. It is time to revolutionize your approach to business. Let's dive in with another episode of Harmonious at Lunch. Welcome back into some more bite-sized business advice. And today we're talking about buying businesses, whether you're new to business, you've never owned one, or even if you're in business and you're looking at growing through acquisition. We're going to talk to somebody who's got probably a unique perspective and has helped clients buy businesses rather than starting them, because who wants to start from scratch, right? That's no fun. But let's dive in here, see how we can learn to grow our businesses through acquisition here. So Jeff Villwock, welcome to the show. Thank you for being here.
Thank you, Brandon. I'm looking forward to our conversation.
So I have personally never bought a business, but I have sold a business. And it was an interesting process. It turned into a disaster. We can unpack that more later. But I'm sure you're going to have a lot of tips on how to avoid disaster in this episode. But you have 3 key reasons why you should not start a business. You should buy one rather than starting one. So I'm curious to dive in here because a lot of people want to get into business. A lot of people paint this beautiful picture of entrepreneurship.
Sure.
Can we first, before we dive into why, can we talk about who? Like, who should be in business pursuing entrepreneurship and business ownership, and who should maybe not, based on your experience?
First, that's a great question because, this is not for everybody. Owning your own business, needing to get up every morning, start from scratch over and over and over again, year after year after year, decade after decade, not for everybody. And so, being your own boss, sounds great to a lot of people. And yet there are some people that just have this burning desire. I mean, they just have to, be running their own show for whatever reasons. And, typically they're very talented folks. They're, what we call them entrepreneurial, right? And so, those are the folks that really want to get into business for themselves. And so, if you're sitting in a job and you're hoping to get rich on your 3 to 5 year average cost of living increases, good luck to you. Not going to happen. But if you're the kind of person that is just, and again, there's a gut need, to do something else, then you got 2 alternatives. You can start a business from scratch, or you can buy an already profitable business. And the thing with starting a business from scratch, I mean, everybody thinks they're going to be the next Facebook. All right. You're not going to be the next Facebook. And so the reality is that about 90 to 95% of all businesses that start fail in the first 5 years. 90 to 95%. That's not a very good batting average. Okay. If you start a business, you're not pulling a salary. Business has no money. You're trying to get a product or a service off the ground to get to the point where you can actually live off the business. Often that takes 2 to 3 years if you ever get there. All right. You have no benefits. No health insurance comes with that. No 401k comes with that. Nothing comes with it. All right. So you have you've got upside, obviously, if you can make it work. But your batting averages are just so bad against you. Now, take a look at buying a business. Okay, you could go out and buy a profitable business. It's making $200,000 a year or $500,000 a year or more, whatever. Well, on day one, you have a salary. On day one, or depending on the plan, maybe at the end of 30 days, you have health care, dental, vision, a 401k plan. You got whatever benefits that company already has for its employees. You get that on day one, and the business is already generating the cash to allow you to do that. So, yeah, if you're the entrepreneur, you have a young family, and you're trying to get off the ground. I mean, one's putting a gun to your head, and the other's serving you up on a silver platter. Which one do you really want?
I don't know, Jeff. I've started 3 businesses so far, and you kind of just talked me out of starting any more. I
Well,
I
you started business. I've started businesses. Yeah, it's tough. It's very difficult. And unfortunately, the fact is that most of the businesses that I've started, and probably most of the businesses that you've started, and you get them up and running, and they get to a point, and for varieties of reasons, they don't get past that point. Right. Whereas, again, if you're buying a business, you can determine where on that life cycle you want to buy into. Anyway, for a lot of people, buying a business makes a whole lot more sense than starting from scratch.
Absolutely, and I'll even say, in that business that I mentioned that I sold, um, even venturing into new product lines or revenue streams, to me, I tried to do it once with, floundering success. We had a really stable, really profitable business, and I said, let's kind of try this out and see what happens. And I wouldn't even recommend doing that. That to me is starting another business from scratch. I would rather acquire that revenue stream or that product line from somebody else who's already has the customers, already has the marketing, doing it profitably, and bolt it onto the business. So I would go so far as to say, even for existing companies, you
Oh
should be
yeah,
looking at acquisition rather than starting product lines from scratch. It is, I mean, it is a road not many people are cut out for. Not even saying that I'm cut out for it. I'm just saying I've done it multiple times and I've seen the good and the bad.
yeah. I've got a client right now that is in the building business. They build homes. There's another business, yeah, not too far away that adds plumbing supply and adds other things, all going into new homes. And as he was looking at his business, said the biggest hole in the business, where all the money's going, are into certain subcontractors,
Yeah.
plumbers, electricians. Why don't I go out and buy a small plumbing company? And now I get to keep that piece of the puzzle. And it makes perfect sense. So you're right, for a lot of businesses, there are verticals. I mean, or you're buying your competitor. You're buying market share. Well, that's great too. And in a lot of business, it's far easier to buy that market share than to take it through increased marketing and whatever else you could do to shift market share. And certainly buying into different verticals, often it makes a lot of sense. You just have to be careful that you've got the bandwidth to manage that, and hopefully you're buying a business with the management in place. Because if your expertise, for instance, is building homes and not in running a plumbing business, right? You want to acquire a business that's got somebody in place that knows how to run the plumbing business. So, I mean, with that caveat, it makes perfect sense to try to grow by acquisition.
Yeah, absolutely. So I want to talk about the 3 keys because whether you're jumping into business for the first time, you want to go the buy route rather than the start from scratch route, or you want to jump into a different vertical, just like what Jeff was just talking about with building and plumbing. You have 3 keys to make sure that's done right. So let's address these 3, and maybe I'll share a little bit of my story about how it turned into a disaster, depending on what Jeff says. Maybe I won't. Maybe that's a later episode. I mean, Jeff, we could have a whole comedy series
Okay,
on
buddy.
TV
Yeah,
with this
I've
crap.
done.
I'm sure you
Oh,
could too.
yeah, I've done over 2.5 billion in transactions.
Yeah.
There's probably nothing you're going to tell me that I haven't already seen. But yeah. Every once in a while, you're in the middle of a sell side transaction, and stuff just happens. stuff just happens, including one deal I was a part of where, we were going to be closing on Monday. The owner CEO that was going to continue on with the business passed away over the weekend.
Oof. Bad timing. Not that we can control those things.
Bad timing. That, needless to say, that deal didn't happen.
Yeah.
So, I mean, stuff happens.
Yeah,
So,
those are the unforeseen circumstances. But as far
that's
as
right.
what's in our control or what we can kind of not predict, but kind of look out for, what are the 3 keys you have for people as far as getting into buying a business?
Well, the first thing you need to know is what you want to buy. I mean, some people have a real skill in a certain area. Okay, they, barbershops. I mean, I'm trying to come. Yeah, if you got a hair background, you want to buy barbershops. If you used to work in a car wash and you ran a car wash for somebody else, you saw how profitable it was. You want to buy car washes, right? I mean, whatever it is, you got something. I'm working with a client now who's got an engineering background. What he wants is to find a manufacturing or distribution business that's not running real well. Profitable, but it could be so much more profitable with better systems. And he's an expert in going in and figuring out how to move product more efficiently or how to do a manufacturing process more efficiently. And that's his secret sauce. I've worked with other people that are great marketers. All right. What they want is to find a product or a service, typically a product, that is currently being sold, currently successful, but whose sales could double or triple or quadruple with the right marketing. They go into that business. Their focus is going to be, I'm going to take this business from $3 million a year to $10 million a year. And this is how I'm going to do it. So the first thing you've got to ask yourself is, what do you want? I've had a client come to me. I just completed his first acquisition. He said, Jeff, I want to buy $1 to $2 million in cash flow. He said, I'm not looking for a job. I'm not going to be there day to day. So I need a management team in place. I need a business that's far enough along in that growth curve that you've got the right people already in place that want to stay. And he said, now I'll be glad to, oversee and, think through and help them determine growth pattern, all that. But really, what I'm really looking for is put capital to work. Okay. And obviously that guy had a balance sheet. And so we just completed the first acquisition, $6.5 million in sales, nicely profitable. He'll do very well with it.
So in that conversation of know what you want to buy, obviously very valuable to know what you're looking for and not just say all businesses on the table. You did bring up 2 kind of distinct paths. One is you want the cash flow route, and you want to be more absentee. The other one, it sounds like, let's use the marketing example. You have a specific skill or talent or passion, and you want to use that passion or skill to enhance the current business. Sounds like they want to be a little bit more active in the business. Probably
and most
for
people, I think that, want to get into, be an entrepreneur, get into business, want to be active in the business.
Right. So, is there one you see working out better than the other? I mean, the 1 to 2 million in cash flow, you want to be an investor, really. And the other side, you want to be a little bit more active and run the business. Do you see success patterns?
No, I mean, either way works just fine. I mean, again, you have to choose the right business. You got to make sure the right people are doing the right things. And, and then they need their guidance as to, how we're going to grow it, going forward. And whether you do that and you're in the business 1 day a week or you're in the business, 12 hours a day. I mean, both can be successful.
Yeah. Assuming you find the right one, like you said. So we'll keep that on the table. That might be one of the other 2 keys, but I'm curious. So knowing what you want to buy, very, very important, obviously, for very obvious reasons. But what is the second key that you offer to your clients?
Well, the second key is, how do you do your due diligence? All right. So you find this business. generally you sign a non-disclosure agreement or an NDA. You get their financials, and you're looking at them, and you say, "Ooh, this looks really good. I like this." Now, what do you do between that and closing? Well, you better do a deep dive diligence into the simplest thing, into their checkbook. All right. I was working with a client probably 6 months ago now. Going to buy a business with $450,000 in cash flow. Great. Looked good. And this guy had contacts that would help him grow this business. I mean, it sounded really, really good. So we got the checkbook. Well, if he was earning $450,000 a year and was taking about 200 out of it already from salary, healthcare, I mean, lunches, dinner, I mean, whatever the guy was pulling out of the business, that should leave about $250,000 extra, right? So I got 3 years of bank statements. I want to see where the $750,000 went. First question I asked, seller, have you taken any distributions in the last 3 years? No. Oh, okay. That's interesting. So your bank balance actually went down over the last 3 years. Where's the $750,000 that you should have? Oh, well, we've got capital expenditures. This happened to be a business that had to spend about $100,000 a year, as it turned out, in CapEx to maintain their business. I said, okay, great. That's 300 grand. There's 450 left. Where is it? Oh, well, I don't know where it is. Well, you better take a look at your accounting. So, I mean, simple stuff like that. A lot of, there are some pieces of due diligence which is very complicated. But that part's simple. And that's the first thing you do. Because if you don't pass that test, you don't pass anything.
Well, I'm curious about that. What the 450, was that on a P&L, or where did that number even come from to then not know where the rest
of it came through a business broker who didn't look at the bank statement, who had no clue where the numbers were coming from or why the numbers were the numbers.
Was it a made up number though?
What's that?
Like how did that business owner get to 450? Did they just pull it out of their butt?
No, their accounting was absolutely horrendous. And that was obvious, even just in the book that the broker sent me. I'm just looking at these, financial statements that, client, this isn't right.
Right.
I don't know what is right, but I know this isn't it. I mean, it was so bad. And so at the end of the day, he just didn't, the business owner didn't know what he was really making, and was shocked to learn that not only didn't he have that 450,000 in the bank, his bank balance had actually dropped about $50,000. He's now missing $500,000 in 3 years. And on that rate of decline, in about 4 months, he was going to be out of cash. So not only have you not taken distributions, you're going to have to put money back into this business just to keep it going. I mean, obviously our due diligence stopped at that point. We said, next. So
yeah, makes sense.
The diligence part of it is incredibly important, because once you sign on the dotted line, once you buy the business, it's yours. It's yours, buddy. And and if you find out that something hasn't been represented properly, there are some remedies. But now you're getting into a legal system where you really just don't want to be. I mean, I've been there, I've done that, missed something. It's not a good experience. So you have to do due diligence. The last thing you need is you need to get the right financing. All right. So we're talking about buying a business that's doing $500,000 in cash flow. All right. In round numbers, generally that goes for about 3 times. So I'll call it $1.5 million just for our conversation today. And so if you don't grow the business, you earn back the entire purchase price in 3 years. If you grow the business, hopefully it'll be less than that. So how do you finance that? Because most people obviously can't write a check for $1.5 million. All right. Well, depending on the assets in the business, you can either use an SBA loan, small business, loan from the U.S. government, subsidized by the U.S. government. You do that through a local bank. And those loans are great because they've got very long-term paybacks, like 10 years. And if there's real estate included, 25 years. So, it's really, very good financing for smaller deals because your local commercial bank, wherever you have your checking account, is very unlikely to be able to provide you with a loan. I mean, unless you've got a lot of collateral. Now, if if you have $1.5 million CD that you want to put up as collateral, they'd be glad to lend you $1.5 million. They'll pay you 4%, you pay them 10%. I mean, you're just arbitraging your own money. And if you had $1.5 million, you wouldn't be talking to the bank anyway. So generally, I mean, banks don't work. The other alternative is it's called an asset-based lender, or an ABL. And they will lend off of receivables, they will lend off of inventory, they'll lend off of real estate. And so those are the two primary ways. I guess the third would be a seller note. You can go into any business and say, I want to buy you. And I said, okay, great. Purchase price $1 million. And you say, fine, I'll agree to the purchase price. You just finance it for me at 5% over the next 7 years. If he says, yes, you own the business. No money out of pocket. Your seller just financed it. Now, that's not likely to happen very often. But those are the three primary ways to get a deal done. SBA, ABL, seller financing. And often it's a combination.
Yeah, no, I was going to say there's you can also combo those. If the bank will put up half, the seller will put up a quarter, then you really only need to put down a quarter, or figure out whatever combination it comes out to be. But yeah, there's a lot of creative ways to get in business too, to buy a business, excuse me.
Yeah, there are.
Yeah. No, this is a good conversation, Jeff. I'll save my horror story comedy for another day, but everything you
call me back.
said,
I'd love to hear about it.
We'll talk offline. I'll share it publicly another day. When we're out of the legal system, there's your little gold nugget for the episode.
There you go.
Yeah, everything you're saying, the first one is really the most important. Know what you want, know what you're going to do with it. At least that's why we're where we are in this case. But no, this was absolute gold of an episode. And I'm a firm believer. Do not start from scratch if you don't have to. Don't reinvent the wheel. Someone's already in business, probably wants to get out of it. There's so many people exiting their businesses without a plan and they just close up shop. Like, see if you probably get it for pennies on the dollar at this point. Yeah. There's a lot of industries where you can probably get a really good deal. And Jeff is your guy if you need help exploring that option. So Jeff, I really appreciate you being here. And then just real quick, you had a YouTube video for the listeners. What's that all about?
We've got a YouTube video, talking about, what do you want to buy a business? Do you want to start a business? And that's a great place to, to start. My email address is real simple. You see the name on the screen, Jeff Villwock. So just Jeff at jeffvillwock.com. It's very creative. And, and you have a direct line to me. There's, go take a look at the video. It'll be insightful, I think.
Yeah, no, I appreciate that. We'll put the video and your website, which has all your contact info, down in the show notes. So wherever you're watching or listening, it's down there, down below. And make sure you subscribe. We want to make sure that we continue to put out this content for you every single day of the week. So whether you want to start a business, whether you want to get into business for the first time, or you're looking to expand through acquisition, whatever it is, we want to keep challenging the way you see business and help you build a more harmonious business and life. That's what we're all about here. We'll see you on tomorrow's episode. Thanks for being here.